Hello everyone, today I'm sharing critical developments in US markets that investors need to understand. If you find this analysis valuable, please like and subscribe for more professional market insights. Please note this content is for informational and educational purposes only and should not be considered investment advice. First item. Fed policy at a critical juncture, the dual test of inflation data and PMI. This Friday, October 24th, we're approaching a critical data release window. The US Department of Labor will release September's inflation data, the first major macroeconomic data released by the Trump administration after 3 weeks of government shutdown. Now here's the key question. Why is this data so important? Here's the critical judgment. This is the only core macroeconomic data released by the government before the Fed's rate policy adjustment on October 29th. With no employment data released due to the government shutdown, the Fed can only focus on this inflation indicator. Wall Street's consensus expectation is that this data shouldn't bring risk to the market. In their words, it won't be enough to make the Fed stop cutting rates. The market is confident that the Fed will announce a 25 basis point rate cut on October 29th. But let's analyze deeper. What happens if this inflation data comes in significantly above market expectations, showing a sharp rebound? That would be a black swan event. The Fed would emergency brake and halt rate cuts, and the market would see tumultuous turbulence. Also on Friday, the US will release October's Manufacturing and Services PMI, the Purchasing Managers Index. This is a leading indicator that helps us forecast October's US macroeconomic trajectory. Due to the government shutdown, with no authoritative employment and retail data provided, this PMI data from private institutions becomes something the Fed and Wall Street must pay even more attention to than usual. This isn't about being bullish or bearish, it's about providing a rational analytical framework. What we're witnessing is how the market weighs the Fed's next move in a limited data environment. Second item. Japan's monetary policy at a delicate moment. Let's turn our attention to Japan. The Bank of Japan governor recently made a very intriguing statement, calling this the best time to raise interest rates. What's his reasoning? First, over the past 3.5 years, Japan's overall inflation rate has remained above 2%, already exceeding the globally standard 2% inflation target for central banks. This provides a basis for rate hikes. Second, Japan's economy has reached a stage of nearly achieving price stability targets, with economic growth remaining stable, so the risk of raising rates now is low. What's interesting, Takaichi Sanae has already signed an agreement with the Japan Innovation Party, and tomorrow she will become Japan's first female prime minister. This is now a certainty. However, Takaichi's fundamental governing logic opposes rate hikes. The Bank of Japan governor made this statement to the public just before Takaichi takes office. The timing is quite delicate. More noteworthy is that Wall Street opinion believes that despite what the BOJ governor says, they will hold steady at October's monetary policy meeting. This raises a question. If they don't dare to raise rates, why make this statement? Is it to test Takaichi, or to hope to form some consensus with her on future rate policy? This may become clearer in the coming days after Takaichi takes office. Third item. US Treasuries return as safe haven, the signal from yields. Let's look at a very important market signal. Long maligned US Treasuries rallied last week, driving benchmark yields to multi-month lows, highlighting the influx of safe haven buying as concerns about credit markets intensified. Let's do the math. The policy-sensitive 2-year Treasury yield fell below 3.4%, hitting its lowest level since 2022. The 10-year Treasury yield also fell below 4%, marking its biggest decline since April. This is the second wave of safe haven buying in October. This information is critical for institutions with significant investment scale. A previous Wall Street Journal analysis pointed out that there's a bellwether for observing whether US equities will end their bull run or face major problems. Watch the US 10-year Treasury yield. If the 10-year yield breaks through 5%, US stocks will definitely face big trouble. The current direction shows not only no yield increase, but a continued decline, even breaking below 4%. Looking comprehensively, this information conveys that on one hand, US Treasuries are once again being pursued by the market, and it also indicates that US stocks remain in a relatively safe state. Has the market already started reacting? The data tells us yes. Fourth item. A milestone in global supply chain restructuring. TSMC US factory reaches mass production. Now let's focus on a major event that could reshape the global semiconductor supply chain landscape. TSMC's Arizona factory recently produced its first chip for AI production. Previously, all Chinese media, including Taiwanese media, were saying TSMC was struggling in Arizona, facing tremendous difficulties, couldn't survive. But now, TSMC has produced its first chip for AI production used by Jensen Huang and others. What's the symbolic significance of this chip's birth? TSMC's Arizona factory production has entered mass production. Jensen Huang specifically traveled to the site to attend the ceremony. This itself demonstrates the importance of this event. What are we witnessing? If TSMC's Arizona factory begins mass-producing chips, then high-tech cooperation between Taiwan and the US will eliminate very significant barriers. More Taiwanese companies will follow to invest in the United States. From a supply chain restructuring perspective, this isn't just about one company's one factory, but a key node in the global semiconductor industry chain's relay out. We believe Taiwan's trade agreement with the US won't be far off from the trade agreements with Japan and Korea. This is substantive progress in manufacturing reshoring and supply chain restructuring. Fifth item. AI's breakthrough progress, finding new direction for cancer treatment. Finally, let's look at a major scientific breakthrough that could change humanity's future. Google recently announced that their AI model has proposed an entirely new cancer treatment method, and this method has already received preliminary validation in laboratory settings. Let's analyze deeply what this breakthrough means. Throughout human development, cancer has been so difficult to treat largely because they are so-called cold tumors. The body's immune system simply cannot see or find these cancer cells. These cancer cells are very cunning. They disguise themselves so the immune system can't identify them as bad cells. Over the past several decades, one of the biggest keys in cancer immunotherapy has been how to turn these cold tumors into hot tumors that the immune system can see and find. But this is extremely difficult, because if you simply boost cell identification signals throughout the entire body, the immune system might start attacking healthy cells while attacking cancer cells, triggering dangerous autoimmune risks. The real key is how to find a drug that can precisely enhance only cancer cell identification signals while not affecting healthy cells. To find this needle in a haystack dream drug, the Google DeepMind team collaborated with Yale University scientists to train a new AI model. They had the AI simulate over 4,000 existing drugs' effects on cancer cells in computers, asking it to find which drug best fits the characteristic of targeting only cancer cells. Ultimately, the AI identified a drug called sotorasib. What most shocked scientists was that this drug had never been used in cancer immunotherapy research before. This was an entirely new, bold hypothesis proposed by AI itself. Even more exciting is that when scientists took AI's hypothesis to the laboratory and tested it with real human cancer cells, they found AI was completely correct. Experiments proved this drug can indeed precisely boost cancer cell identification signals by nearly 50% in environments with immune signals that aren't strong enough. Meanwhile, in healthy cell environments without immune signals, it produces almost no effect. Although there's still a long road to actual clinical trials, this research proves AI has the capability to discover entirely new scientific knowledge that humans have never conceived. From an investment perspective, this represents AI not merely as a tool, but becoming a source of innovation. That concludes today's Critical Intelligence Briefing. If this analysis has been helpful for your investment decisions, please like and subscribe to support our continued delivery of professional market analysis.